Good afternoon, traders. I hope everything is going well and hope you're having a blessed day. All right, today we're going to go over Fibonacci and how to enter the market using that tool. All right, share my screen here. Now, as you guys know, if you didn't know, the Fibonacci tool was actually used and discovered by Leonardo Fibonacci. He was a famous mathematician, Italian mathematician. All right, and he realized the universe has a sequence of numbers, right, that bounce off. And these levels, as you can see, the 23, 38, 50, 61. And then we have some extended levels, 0.786, 0.88, and 100, right? And then there's even more, right? And a lot of traders, a lot of traders, probably including yourself right now, all use this tool, right, to help you trading. And today I'm going to show you guys how I use it when I'm trading and how it helps me identify areas, zones, and further confirms my analysis. All right, so today, as you guys know, I've actually entered a buy for gold. I actually have this going up higher. If it breaks this middle, probably see it come all the way up here. Can make a nice 24 grand, but let's see. For right now, I got to go into like 1300. But anyways, back to Fibonacci, right? So what you want to do is, like all time frames, like I said, you want to use it primarily on one of the three majors. Now, you can use it on any time frame. You can use it on any time frame. You can use it on the 1 hour, the 15-minute, 5-minute. I prefer the higher time frames because you get the overall outlook of what's going on, right? And it's great to use it when the market is in a trend, like this uptrend right here, this uptrend right here, this uptrend right here, this little uptrend right here. So actually, that I'm on this daily, this was a downtrend, right? And you always, every time you're using the Fibonacci tool, you want to do it from a swing high to a swing low if you're looking to sell. And if you're going on an uptrend, from a swing low to a swing high, right? So for example, if I was going on a downtrend, I take the extension and drop it down from that swing high to this swing low, right? And if I was going on an uptrend, I take it from this low to this high, right? Perfect. So using this as an example, we're going to stick with gold. So this was actually on a downtrend here, right? Swing high to swing low. Now, you use one of the higher time frame, preferably the daily, the weekly. That's what I preferably like. You can use it however you want to use it. Now you want to move to a smaller time frame. I like to go to the 4 hour, 1 hour. Now, same rules apply. How I use supply and demand zones. You want to, the tool is just an added incentive to confirm your validation when trading, right? So what I do here is same thing, use my trend line. So I knew gold was about to go on this nice uptrend, right? We came from this low here, came up, retested. I knew once it broke this trend line here, as it's doing now, that's why I placed my buy position. We're going to have a nice move to the upside here, right? So you can easily see this going, even if this goes all the way up to 38, I caught a nice 200. I'm looking for a 300 pip move on this. But anyways, so how you want to use these levels is basically every time price touches a level, you want to see how it reacts, right? So for example, when price was coming on this downtrend right here, right? It came to the 88, it had a gap. Probably this was like London or something, opening of Asian session. You want to see if a bearish engulfing candlestick forms. So I would have gotten a sell right here, and then my stop loss above the previous high there, right? And then my take profit, you can trade to each level. So right here would be at the 61. So you caught a nice 130 pip move. As you see it retrace, then you got another bearish engulfing candlestick here and even here, right? And as you see it broke through, I can trade it to the next level, to the 50 extension. That's another 140 pip move. And as you can see here, another engulfing candlestick, and you can just trade it to each level. That's what a lot of traders do. So now that price is pretty much reversing, and now it's broken through my trend line, it's going on this uptrend, I plan to trade it again It's probably gonna come to the 30 to the 2360. There might be a rejection, price retraces, comes back down, and then once it breaks through, next level is going to be the 3820, right? And all I'm looking for, like I said, for confirmation every time it gets near these levels is a bullish or bearish engulfing candlestick, right? So this one right here, I would have got in. It didn't go all the way up, so I actually would have got stomped out, but you would have got stomped out probably in profit if you would have moved up your stop loss. Just a barely broke even, you know, only 50 pips here, right? Came back down. I think this go around, we should see a further move to the upside, right? Definitely come back around this range. I think price will for sure reach this zone, as you can see here, bearish engulfing candlestick. That's why my take profit is around here, right? Looking at a nice 10 grand. Cool move. Okay. Another example. I know I traded this today, caught that nice. So drop, boom, oof, this is beautiful, 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 right? So again, this was an uptrend, swing high, swing low to swing high. And as you can see, once I move down to a smaller time frame, right? So same thing, same principles apply. Draw a trend line, see if price confirm, broke through. See how I got that engulfing candlestick around the 50 level? Could have caught a nice buy, and you can ride it to each level. And it helps even more when you understand the trend. So that's why when you understand the trend of the market, what market is actually doing, when you apply Fibonacci, it's a very, very powerful tool, right? So as you can see, price is coming down, going on a downtrend, and as you can see, engulfing candlestick, stop loss, and then you can ride it down to the next level or to the next level. Comes back up, you got your another bearish engulfing, another bearish engulfing, so on and so forth. And you can do this on any time frame, right? We got a big bearish engulfing there. All right. So I just wanted to cut this quick video, show you guys how I utilize Fibonacci and why I love it. And like I said, you can back test it every time price gets around these fib levels, especially if you're trying to confirm a trend. Once you see a bearish or bullish engulfing candlestick, so like right here, bullish, so you could have caught a nice uptrend up here, right? 40 pips there. Or when it broke through here, nice bullish, so your stop loss be below here, ride it all the way up here, you caught a nice 90 pip move, and then boom, got your bearish engulfing candlestick there, sell, and then you can just sell to each level, right? So I have my level. I know price is going to probably come all the way back down here. So nice 200 pip move, right? So that's solid. So we can actually move this down. Boom. All right. So that's a quick video on how I use Fibonacci. It's not difficult. It's not hard. Again, you want to, for an uptrend, swing low to swing high. For a downtrend, swing high to swing low. So back down. All right. And then you want to just wait. Some of the sweet spots you definitely want to look for is the 23, the 38. Definitely if you're looking for buys. And then looking for sells, you want to, as you can see, the 61.8, which a lot of people like. And I personally love the 78, 0.786. Those levels right there, definitely sweet spots for getting buys and sell entries. All right, guys. So this is Stevenson Lindor here. If you have any questions, any concerns, hit me up. Let me know.